All the gold in California is in the bank in the middle of Beverly Hills in somebody else's name, according to the Gatlin brothers. That's how you get rich, retitling the precious metals in somebody else's name. But there has to be a better way to make money investing in gold and silver than gimmickry with ownership titling. And today's ETF battles, we've got just the ticket for you. We've got an income contest between covered call gold and silver ETNs. So stick around to find out who wins. A warm and enthusiastic welcome to ETF Battles. I'm DeLegge. Glad to have you with us. This is where we congregate to talk about the birds and the bees of ETF investing. And if you have a certain ETF contest that you'd like to see, send us your ticker symbols in the comment section below or on our Twitter feed at ETF Guide. If we choose your battle, you win your choice of an ETF Battles coffee mug or a shirt. Now, before we go any further, be sure to visit the description section below. We've got links to our program sponsor, Direction Investments. Plus, join the waiting list for our brand new margin of safety investing tool. The link is provided below. Today's ETF battle was requested by Beach Bum Trading. Now, this is a viewer who I'll just refer to as BBT. They wanted to see this covered call matchup between GLDI and SLVO. Now, both ETNs are from Credit Suisse. Both products are designed to produce monthly income by selling covered calls on gold and silver ETFs. Now, our judges are going to get into the details on that in a minute. BBT wants to know what we think about ETNs. Well, I hate them, BBT, and you can quote me on that. But never mind what I think. Let's see what our judges have to say. Judging today's covered call ETN contest is an illustrious duo. We've got Cinthia Murphy with the ETF Think Tank and David Dierking with TheStreet.com. Judges, great to see you again.
Hey, Ron, great to see you.
Hey, guys, good to be here.
So our four battle categories are cost, exposure strategy, performance, and yield are combined. Plus, we've got a mystery battle category where you, the judges, can pick a single factor or multiple factors that you think are crucial to today's matchup. Our judges can also nominate wildcard ETFs. If they feel there's better choices elsewhere, they can opt for split decisions. It's completely up to them. I've got the scorekeeping chores, and at the end of the show, we'll declare an overall winner. Keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or any of our judges. So let's get started with Cinthia. Cost is the first category. Which of these ETNs wins the battle?
Hey, Ron. So these ETNs actually are perfectly matched. They both cost 65 basis points in expense ratio. They have the exact same price tag. They trade a similar amount every single day. Their spreads aren't particularly dramatically different. So maybe it's because they're all part of the Credit Suisse family of ETNs. They are priced to match. So definitely a split decision from where I sit.
Thank you, Cinthia. Dave, you're up next. How do you see it in terms of cost?
Yeah, I see it the same way. Expense ratios are the same. I don't need to repeat everything Cinthia just said, but yeah, they only trade about $1 million a day or so. I mean, there's just not a lot of ETN traders out there, so spreads are a little high, but yeah, expense ratios are the same, so it's a split decision for me too.
Exposure strategy is next. Dave, you're still up. Give us your analysis.
Yeah, both of these products are structured essentially the same. The only difference is GLDI is based on the GLD ETF, SLVO is based on the SLV ETF. So really the underlying is the only difference here. Yields on both of them are well into the double digits. The only real difference is that GLDI writes out of the money covered calls, which are about 3% out of the money. SLVO, their covered calls are about 6% out of the money. So GLDI might have a better chance of the underlying getting called away on that front, but structure-wise, strategy-wise, they're pretty much the same. So split decision again for me.
Cinthia, you're up next for exposure strategy. Do you agree with Dave's analysis?
I do. I think if it's really to pick between one or the other, you have to make a decision on whether you want to track gold or silver. I mean, both strategies are built to deliver yield on precious metals that are not known for delivering yield. So this is a yield play on gold and silver. So it's really about, are you trying to track the performance of gold or of silver, which if we look, we're going to talk about performance next, but if you look at in an inflationary environment or in different market environments, you might want gold. If you're really looking for industrial application and different types of uses, you might want silver. So, but in terms of how these things are built, the exposure, it's very similar, with the exception that, that out of the money call element, on GLDI, you're only talking 3%. On SLVO, you're talking 6%. So that would change how much upside capture you may get with these things. But I think the core question is, do you want gold or do you want silver?
Okay, so that sounds like a split decision to me.
Yes, it is. A lot of words to say split decision, yes.
That's okay. That's okay. They're your words, not mine. I don't want to put them in your mouth, but that takes us next to performance. And Cinthia, you're still up, so break it down for us.
Yeah, in the performance, I think GLDI wins. SLVO has really, really struggled here. I was pulling up, and David can correct me, but I was pulling up, I think SLVO has underperformed GLDI in year to date, 1 year, 2 year, 3 years on annualized basis. So it's GLDI does perform better, has performed better. So the performance goes to GLDI.
Dave, how do you see it in terms of performance between these two ETNs?
Yeah, I see it the same. Cinthia said GLDI has outperformed over pretty much every time frame. That's obviously because gold has outperformed silver. So I think one way you could frame the performance is how these two funds have done against their underlying. In the case of GLDI, it's lagged GLD by about 6% since its inception. SLVO is lagged by about 21%. So in either case, just owning straight GLD or SLV would have performed better. But GLD has been able to stay a little tighter to its underlying metal. But if you look at total return or how it's performed against an underlying, GLD wins in both cases, so it's the winner.
That takes us next to the mystery battle category. This is where our judges can pick that single factor or multiple factors to support their analysis. So, Dave, what is your mystery battle category, and which of these ETNs wins?
Yeah, I wanted to take a look at volatility on both of these products. And the covered call strategy is a little safer than just investing straight in an underlying security. And that's the case here as well. Both of these are about 20% less volatile than just owning gold or silver outright. But silver, of course, has a lot of industrial applications to it. GLD is pretty much just a straight precious metal. People use it as an inflation hedge, a risk hedge. It's really an uncorrelated asset that just kind of does its own thing, but it's used mostly as a defensive asset. So silver has naturally been more volatile, but again, silver is a little more cyclical. GLD is a little more defensive. So I think on the volatility front, I would probably lean towards GLDI on this one, just because you're getting more of a pure covered call strategy as opposed to sort of the cyclical volatility that you'll get with SLVO.
That's a solid take. Thank you, Dave. Cinthia, you're up next. Your mystery battle category, what is it, and which of these ETNs stands out?
So I actually want to start by saying I agree with David's argument on volatility, and that's actually a really, really interesting argument. I am actually going to go with structure, and I'm going to offer a wild card. And that is because both GLDI and SLVO are ETNs, exchange traded notes. So as you know, they're not an ETF, they're not a fund, they are a debt note. And so that comes with a whole different ball of wax when it comes to risks. And so if you're really trying to find that yield element on a precious metal, there's not a lot of ETFs offering that through the use of options, but I found one like from First Trust, IGLD, and that does that options overlay on a gold, physical gold, to try and attempt the same result through an open-ended fund structure. The difference is that the yield is not double digits like you see on the ETN structure, so you give up some of that yield in order to have the 40 Act fund structure. but I'm a fan of ETFs. So I would say IGLD from a structure category perspective.
Thank you very much. We got you down for IGLD. Now we move to the part of the program where our judges get to give us their overall ETF battle winner. And this is a battle between ETNs. So Cinthia, give us your overall winner.
So listen, Ron, you know me. I hate the split decisions. I feel like we should be able to pick a winner. This is particularly tricky because GLDI and SLVO are basically identical products just based on different precious metals. I would give the edge to GLDI. I think, gold is a staple in a lot of folks' portfolio. I think GLDI was the first to come with this idea of yield on gold. It was innovative in its time, so it's performing better. So between the two, I would give it to GLDI. And then just remember, there are ways to access this concept through an open-ended fund structure like IGLD, if ETFs are your thing.
Well, just to clarify, you can nominate that wild card as your final choice. If you think that IGLD is preferred even over GLDI, you're free to do that. So let me just throw that out there.
No, and I appreciate that. But my guess is if you are using one of these ETNs, is because that yield component is really the driver here, and you are going to get that souped up yield in the ETN in a way more so than you're getting on the ETF. So my guess is for the use people are looking to these strategies for, they might be perfectly happy with that counterparty risk and all the things that come with an ETN. I'm just saying there's another option there if you don't mind giving up some of that yield.
Excellent. Thank you very much, Cinthia. I got you down for GLDI. And then, Dave, your final choice. Give us your overall winner.
Well, I think it's safe to say that none of us is a fan of the ETN structure. It's kind of like choosing between GLDI and SLVO is kind of like choosing between hospital food and airline food. They'll both fill you up, but neither one's going to satisfy you. So I guess in this case, I'll go with GLDI as well. I think on a risk-adjusted basis, it does a little better. I think using gold as opposed to silver for this kind of yield on metal strategy is probably a little more appropriate. It's got better returns over the long term. So again, with the caveat that, this probably isn't the best way to get yield, I'll go with GLDI as the winner here.
Well, our judges have spoken, and according to my battle scorecard, today's winner is GLDI, and it won in terms of performance and yield. Also, our judges agreed on the overall winner. They opted for a split decision when it came to cost and exposure strategy. And as pointed out, the covered call strategy adds a dimension of income on gold and silver, assets that have no dividends or revenue or income like you get from traditional securities like stocks or bonds. But the ETN structure, as our judges pointed out, add a fresh dimension of credit risk to your trade. So beware of that. If the issuer goes bankrupt, the value of your ETN could be wiped out. Nonetheless, selling covered calls on gold and silver, again, is a creative way to generate cash flow and income on bullion assets that pay no dividend in themselves. So great job to Cinthia and Dave for your outstanding analysis with today's covered call ETN showdown. We really appreciate your insights.
Thanks for having me, Ron.
Thanks, Ron.
Be sure to visit the description section below for research links to our judges. And while you're there, check out our link to our program sponsor, Direction Investments. Plus, we've got viewer resources, including online classes and other financial tools. Don't forget to hit the subscribe button. Be sure to hit the like button also if you've been enjoying our shows. Which ETF battle would you like to see in our next episode? Post your ticker symbols in the comment section below or on our Twitter feed at ETF Guide. If we choose your battle, you win your choice of an ETF Battles coffee mug or a shirt. I'm Ron DeLegge. Thanks for watching. We'll see you next time.